John, when it comes to the middle class, specifically in the United States, the cars are financed, the houses are financed, the shoes are financed, the colleges and education is financed, everything's financed. In the future, how are Americans going to live? We borrow everything to live now. And if we're going into a situation where we're going into a restructuring that's going to happen in our financial system, I mean, I, Americans literally are living almost a fake life. Would you agree?
Completely, yeah. We've basically, for the last 30 years, lived beyond our means and borrowed because the rest of the world wanted dollars. So that the rest of the world handed the U.S. An effectively unlimited credit card. And we maxed out that card. We sent China $500 billion a year for Chinese stuff, and ran a big, we bought a lot more from Europe than Europe sold to us. And we did all that just because they wanted our dollars. And so now we are the biggest debtor nation that has ever existed. And so we're going to end up like bankrupt people have always ended up throughout human history, having to live within our means. Pretty soon, the credit card will get taken away, and we will have to live within our tax base and our incomes. And that's, a couple of $1 trillion a year less than we now spend. And so the process of the next few years is going to be allocating that pain. Who gets less? Is it going to be retirees? Right now we're trying to destroy the value of the dollar and lie about it in our official inflation statistics. And since Social Security is indexed to official inflation, we're stiffing seniors by debasing the dollar, and savers and people on a fixed income who have bank CDs and things like that. They're the ones who are now feeling the pain. Later, it's going to be public employee unions. People like teachers and cops and firefighters who got contracts from cities and states that were, fantasy. Cities and states don't have that kind of money. And so we're going to see massive layoffs across the public sector. And so now we have to deal with the consequences of 30 years of borrowing too much money. And it's going to be ugly, undeniably, and painful and really divisive. But there's no alternative to going from here to there because pretty soon the credit card's going to disappear.
Now, John, just yesterday, the Bank of England governor said we're facing the worst financial crisis in history. Yet if I went to CNBC.com right now or MarketWatch, it's as if everything's fine. Just, are you surprised how long they've been able to keep the system propped up since '08? And secondly,
yeah.
are you surprised that the media is able to that Wall Street is able to just continuously pretend like nothing is going on?
A rational analyst from Mars, let's say, would probably have come here and said the system was about to collapse in 2000, and just by running the numbers. And we've been able to keep it going a lot longer than would have seemed possible, but that's the nature of bubbles. Bubbles always go on so much longer than you think they should be able to just by looking at the numbers in a rational way, because it's not rational. It's an emotional process now. And we can basically keep this going as long as the rest of the world wants dollars. All right, so that's basically the key to everything. When the rest of the world realizes that the dollar is a Ponzi scheme or a con game or whatever term you want to use for it, and basically gives up on us and refuses to accept dollars on current terms. In other words, interest rates go up because the rest of the world will only lend us money if we give them some extraordinary return for it. And then everything falls apart. But until then, we can keep it going. And, the financial media and Wall Street, they live very short term. And it's the next deal on Wall Street because that's where your fees come from. If you're an investment banker or an analyst or even a money manager, your income is based on your quarterly or even more short-term performance. And so it doesn't pay to look at the 3-year or 5-year or 10-year horizon because you're not paid based on that. And the same thing with the financial media. They're reporting what happened today in the markets. And if the Fed flooded the system with money today and that pushed up asset prices a little bit, then we're in a bull market and everything is great. And they're not looking at the level of debt that it took to get the last year's GDP or consumer debt versus consumer spending. These are long-term indicators that don't affect what's happening in the market today. Eventually they will, and then you'll see a mass change in the tone of reporting and in the personality of Wall Street. All of this stuff will change, but it won't change until nobody wants dollars anymore. So we'll see it happen, but in the meantime, denial will rule.
And it may take until natural resources become an issue, because right now everybody wants to continue the dollar scam because it keeps everybody afloat. As soon as the system changes with the fiat currencies, we're probably going to see a lot of governments overthrown, wouldn't you say?
Oh, yeah. See, that's the nature of denial psychologically, is that it goes on as long as it goes on because it's in the interest of people to keep it going because the alternatives are too scary. If you can't face the alternative psychologically, you ignore it. And that's what's happening globally right now. We, the people in charge especially, cannot imagine an end to a world in which governments have printing presses that allow them to give voters whatever voters want without asking anything in return except votes. That is a comforting world for a politician. And the alternative, one where they actually have to make hard choices and say no to people and take things away from people, is so difficult to imagine and that it's almost inconceivable now. And so the markets don't want it to happen. Politicians don't want it to happen. Our U.S. trading partners certainly don't want it to happen because they depend on U.S. consumers to finance their export industries. And so the whole world wants the dollar game to go on. But economic laws are not that far removed from physical laws. You can bend economic laws a bit. You can extend and pretend for a while, but eventually these laws are real. When debt reaches a certain level in relation to your ability to pay off that debt, you lose your freedom. Everything falls apart. And that's true for an individual and a family and for countries. And with the difference being countries can just print for a little while longer. But, financial reality eventually bites. And we're at the point where it could happen any day now. Maybe they can extend it for another few years, or maybe tomorrow we wake up and the financial system has just frozen. There's no way to know when it's going to happen. So that means you need to be positioned for it with your personal capital. You need to be an owner of precious metals, which are the only kinds of money that governments can't create in infinite quantities. And you need to be geographically diversified. You need to have some money outside the country in case the IRS freaks out here, and they start imposing capital controls and wealth taxes and all the other things that countries in the middle of a currency crisis have a tendency to do. And you also maybe want to be shorting the market instead of being long the market. A typical financial planner or stockbroker will look at your age and then consult a cookbook and say, all right, you need to be in 60% long stocks, 30% bonds, 10% cash. And you need to do the opposite of that today because those traditional assets are all based on business as usual, as the financial markets functioning as they have in the past, and that's probably going to change. When things really start to fall apart, the financial markets will either freeze up or they'll shift into reverse big time or whatever. And so you can, instead of being exposed to assets like stocks, bonds, and cash, you can bet against them by shorting those things, and that's a big subject that we don't have time to go into in detail now, but I think the average investor should be educating themselves about how to short. And it should be looking at betting against the things that their stockbroker tells them to bet on in the future.
Speaking of investments in closing, we talked about the junior miners. You have several articles about the junior miners. A lot of us are invested in them because we've purchased long-term food storage, we've paid off debt, we own the physical metals. And now, we feel like we've protected ourselves, and now we're looking to profit from the future. What are your thoughts of people owning junior mining companies and mining companies in general?
Yeah, well, I think there's a a traditional long-term relationship between the metals and the miners. And generally, historically, the miners have been more volatile than the metals. In other words, in good times, when gold and silver are going up, the miners tend to outperform because they're basically highly leveraged plays on the metals, because they're valued not just on their earnings, they're valued on all the metal that they've got in the ground. So it's like a big vault full of gold and silver, only it's under the ground. And so when gold and silver go up a little, that vault tends to be revalued in terms of the stock price in a bigger way than just the move in the metal. So historically, if you were optimistic about gold and silver, you could own the miners and make more than you would make by just owning gold and silver. But lately, that relationship is broken, where gold and silver have been going up, and the miners have either been going up just a little tiny bit, nowhere near as much as the metals have gone up, or they've actually been going down. So you've got this huge gap from a historical perspective between the value of the metals and the value of the mining stocks. And so if the historical relationship holds, you should expect to see the miners outperform the metals going forward. And you can play that in one of two ways. You could either go long the miners and then short the metals, which means you're just playing the relationship between them. And it doesn't matter if gold or silver go down as long as the miners do well relative to gold and silver. Or you just go long the miners because you expect gold and silver to continue to go up, and you expect the miners to go up even more. And, I'm not sure which of those are better at this point. I know I own a lot of mining stocks, and especially the junior miners. They tend to be even more volatile than the larger established mining companies, and they've gone down even more lately in relation to gold and silver. And they're a lot more risky, so you want to diversify big time with junior mining stocks. And you can do that through some ETFs that are out there now. There's GDXJ and SIL, which are mining ETFs, which own a lot of the smaller miners in gold and silver. And that kind of spreads your bets around that sector. And so if gold and silver continue to go up as we continue to destroy the value of the fiat currencies out there, then you would expect these mining ETFs and junior miners in general to go up even more than gold and silver do. And that's not necessarily a short-term play, but over the next 2 or 3 years, it's reasonable to expect the relationship to come back into balance, and the juniors especially, but miners in general, to outperform gold and silver.
John, if somebody wants to get a hold of you or see your work or subscribe to your newsletter, how do they go about doing that?
Well, I run dollarcollapse.com. That's www.dollarcollapse.com. And it's a kind of a news aggregation website/blog where I post some of my own thoughts, but also a lot of links to the articles that cover a lot of what we talked about that I would read if I had the time. So it's designed to be a place where you show up in the morning or after work in the evening and spend an hour or so, and you kind of get an overview of what's going on in the world from the point of view of financial crisis. The things that we're doing in the world to destroy the dollar and the euro and the yen, and that to make precious metals go up. That this is where you go to find out about what happened today in those fields. My pleasure. Thanks, Daniel.
Thank you very much, John.